doctor. Don't let HCM bend you for good. Learn how to stay in the game at heart.org/HCM student athlete. Your heart, your health, your move.
You still thinking job change in the new year?
Yeah, I need something that's in high demand and more stable in this economy.
IT?
Yeah, cybersecurity, maybe even AI.
That's what I did.
Really? How?
Went to My Computer Career. You don't need any prior experience, and you could start your new career in a matter of months. A lot of IT pros go to school there, too, to level up.
Sweet. Are classes online or on campus?
Both.
Wow, I'll check it out. Thanks.
Make this your year. Take the free career evaluation now at mycomputercareer.edu. Financial aid is available for qualified students.
Broadcasting from the Kanowski-Bresney studios comes the radio medium Laura Lee Show.
I feel like you had to let him go.
Yes, it is. He was on life support.
You've taken on the burden for his passing. Is that true?
That is right.
There's something to do with a Barbie doll.
He used to stick the old school Barbie dolls in the cake.
Oh my God, you're giving me goosebumps right now.
The radio medium Laura Lee Show. Tune into your spirit every Tuesday at 4 p.m.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston, the Money Matters Radio Network.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Understanding Medicare, Essential Questions Answered. Mike, first one that most people have, how do you actually become eligible for Medicare?
Vast majority of us, you turn 65, and there's a special window that becomes open to you when you are turning 65 for you to sign up for Medicare. And important here because you really do have to sign up. Even if you might not be using the coverage in the way you planned, there's a 7-month window, 3 months before the month you were born, 3 months after, and the month of your birth that you have to sign up for Medicare, and you need to get in there and do so. Otherwise, if you're disabled, you are potentially eligible for Medicare, but for most of us, it's that 65th birthday.
What are the different parts of Medicare, actually?
Yeah, so the Part A basic piece is just your hospital insurance coverage. Most people don't pay for this. This is part of the benefits, and it'll cover inpatient hospital stays, skilled nursing facility care, etc. Hospice care, for an example, is in there. Then you get into Parts B, C, and D, and that's where you get into more complex stuff. But your Part B is your medical insurance. Part C is your Medicare Advantage plans, and then Part D is an important one when you're retired as well, your prescription drug coverage, and that's where getting a professional involved there to help you consult on what you might need given your specific health needs is important.
The guide is titled Understanding Medicare, Essential Questions Answered, and it discusses these topics as well as a host of other ones. How do you request it? Call 800-393-4001. That phone number again to request the guide is 800-393-4001 for the guide Understanding Medicare, Essential Questions Answered.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Estate and asset protection are the keys to a successful retirement. Cushing & Dolan's new guide is called Back to the Basics. It contains a simple blueprint that will help you create a retirement plan that protects your assets from probate and the nursing home, while also giving you guidance about how to create your will and set up your beneficiaries so that your family's financial security is intact as you get older. If you haven't done your planning yet, or need a second look at your existing plan, call Cushing & Dolan today at 866-848-5699 and ask for their new guide called Back to the Basics. There are many necessary elements that you'll need to include to give you the peace of mind you want as you prepare for your later years. That number again is 866-848-5699. Or you can request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Paul Lane and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Paul Lane and Marc Fandetti.
We made it. It's Friday. Welcome to this Friday version of the Financial Exchange. Paul Lane, Marc Fandetti, and Tucker Silver here with you. As we kick off the show, markets in relatively mixed territory. The Dow Jones is off over 390 points at the moment, so over 400 as we speak, and the S&P 500 is off about 0.4%. It's been a relatively quiet week in terms of economic data. Last week we had the inflation report. This week we did get Walmart's earnings on Thursday, and today we did get some home sales data, which we will dive into. But we kick off our show with a little bit of a discussion on where markets stand. It's been about a month since President Trump was put into office. We're about 2 months into the year, so take this with a grain of salt. But there's a piece here from Barron's which goes over the performance of the S&P 500, the U.S. stock market, relative to some of its international peers. And over the course of the last decade, the S&P 500 has significantly outperformed international markets. And traditionally, when you talk to portfolio managers, they've always been a sort of proponent of having a 25%, or, the percentages can vary, of international exposure, but those areas of the market have underperformed dramatically, like I mentioned, over the last decade. Year to date, the S&P 500, we sit today, it's up a little over 4% through the first 2 months of the year, which, to be clear, is not too shabby at all, coming off of 2 years of 20+% returns for the S&P 500 in 2023 and 2024. But its European counterpart, the Euro Stock Index, the Euro Stoxx 600 Index, is up about 9% so far in 2025. As well as the Hang Seng Index, which is up about 13%. That is for the Hong Kong Chinese stock market. And so, Marc, to me, the valuation piece has always been mentioned over the course of the last several years. The S&P 500 currently trades at 23 times on a price-to-earnings basis. It's expensive. We've covered that a lot on the show. While Europe trades at 17 times price to earnings, the European stock market index, and the Chinese Hang Seng Index is at about 13 or 14. So it's a very small sample size. I don't really think there's a lot to take away here, but any of your thoughts as to why we might be seeing slightly higher performance from those areas of the market, granted only 2 months or so into the year here?
Well, I think you hinted at it, Paul. One is that international relative to U.S. has been badly beaten up, so to speak. It's underperformed dramatically, not just over the last 5 and 10 years, but going back to, say, 1999, a period, if you take your mark at that point, from which international stocks should have been reasonably well positioned. We know U.S. stocks were in a bubble. They collapsed after that. Yet, from 1999 to present, the outperformance of the S&P, let me just give you the totals, the cumulative performance of the S&P 500, 3,400%, 3,400% gain.
Wow.
Versus a little under 500% for the MSCI, that's the Morgan Stanley Capital International, developed market index, the so-called EFA, Europe, Australasia, which is a word I think they made up, but we know what it means, Far East. So whether you look back 25 or so, as I'm doing here, years or over more recent periods, the outperformance of the U.S. market has been staggering. And that's mostly, though not entirely, due to tech. The outperformance of the U.S. economy, just keep in mind stocks are tied to company earnings. Taking multiple, that is PE expansion or compression, out of the equation for the moment, stocks are driven by earnings, which are in turn driven by economic growth. And economic growth has surpassed, economic growth here in the United States has surpassed that in the developed world by about 50% over the same period. So it's really an uneven economic growth story. And then more recently, as you pointed out, international stocks are looking cheap. Growth prospects for Europe don't look terrific in the short term. They might even be in recession in aggregate right now. But a little bit of catch up is understandable. U.S. stocks make up 70% of global market cap right now. 25 years ago, that number was about 50. So while U.S. stocks are dominant by any definition, you can't ignore international stocks if you're trying to build a well-diversified portfolio, Paul. They still make up a little more than a third of the global opportunity set.
I want to spin back to a stat you quoted there. So if over the last 25 years investing in the S&P 500, you would have seen a 34x return on your investment versus 5 times return for international. Was that right?
Yes.
Wow. That's staggering. 25-year period.
Yeah, you could add one to those numbers. I'm using a tool called Y charts, and you can immediately calculate cumulative or aggregate percentage returns. That's where I'm pulling this data from. But so technically these are approximations. But yeah, Paul, it's several fold difference between U.S. and developed market international over the past 25 years, and over shorter periods too. U.S. stocks, as you pointed out, have been overwhelmingly dominant.
It's interesting you made the point about the technology sector. There are some concerns domestically that if you look at the S&P 500, almost a third of it is weighted towards tech companies. They really have taken, like you've said, the lion's share of market cap, whether you want to look at Nvidia over $3 trillion market cap, Apple and others out there. But if you look at the Euro Stocks 600, the sector breakdown there, the weighting to information technology is only about 7% as of the last quarterly report here, compared to 30 plus for the U.S. So it's interesting that you make that point. It's backed up by the sector breakdowns that the U.S. has the lion's share of tech exposure. That's really what's provided the growth over the last 25 years, less so industrials, healthcare, and financials, which are the highest weighted sectors of the European market. We haven't seen the same amount of growth there. And that actually segues into sort of the next piece that is in the stack here, where the Bank of America is going over the valuation metrics of the S&P 500. And by any historical measure you look at, it's really expensive right now. And one piece of it is this idea that the tech sector has benefited over this 25-year period that we've been talking about, and even back the last 15 years, from tremendous amount of growth and capital investment. And what's claimed in this piece here, less regulation. So the piece that's being, or the point rather that's being made in this piece, is that perhaps though the market looks expensive, there's a bull case in here based on deregulation. And Mark, the question I have to you is, what the heck would that mean for the financial sector? I know what the word means, but I just don't understand how that's going to be such a big catalyst to the financial sector. Like, someone give me an idea of what that means that would stimulate a tremendous amount of business activity.
Yeah, that's a key point. It might represent a one-time boost. So deregulating, requiring that they comply. I'm just repeating what you said, but requiring that they comply with with fewer regulations. I don't know what that means either operationally. To what regulation of banks is a result of successive the regulatory structure as it exists today is a result of successive financial crises that were sparked by bank
screwing up, just absolute abject failures.
I like it.
Let's rip them apart.
This is plain talk Paul today. I like it.
They needed the guardrails. They needed, whether you want to use bumpers at a bowling alley or, they needed the guardrails, and that's why they're in place. So the argument, I guess, would be made perhaps lowering capital requirements or some of the ratios that they're subject to in the stress tests that are run on, I believe, a quarterly basis. But I just don't know how much loosening that you'd be able to do with that, and how much these banks would be willing to jump in head first to further risk up their balance sheet potentially for more growth on the financial sector side. I just don't see that.
I don't think, Paul, result in sustained profit growth. It'll be a one-time. Suppose that the new administration removes some of these shackles. They're going to do it all at once, I assume. So you would see a jump in profits as a result of reduced costs of compliance, but that's all you get out of it. It's a leveled shift. Then from there, presumably they grow at the same rate they were previously. So a one-time revaluation of the sector might make sense, but I don't think, unless I'm missing something, and financial stocks aren't my area, so I could be missing something obvious, but I don't think you price in higher or growing rates of growth indefinitely.
Certainly. We're going to take a quick break here on the Financial Exchange. When we come back, we got some home sales data fresh off the presses here at 10 o'clock. When we come back from break, we're going to be diving into that as home sales drop sharply as prices hit an all-time high for the month of January. We're covering that right after this break.
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
Understanding the costs of Medicare can be complicated. Hi, this is Chuck Zada from the Armstrong Advisory Group. Medicare was originally a two-part program, but is now 4 parts, and making sure you know what you're eligible for and how much you'll need to pay is key to having the right healthcare coverage as you get older. Medicare is divided among parts A, B, C, and D, all of which have different premiums, deductibles, and coinsurance. Our new guide called Understanding Medicare, Essential Questions Answered, can help you learn about these issues and others, such as whether Medicare pays for long-term care. Call the Armstrong Advisory Group at 800-393-4001 and request your free guide today so you can determine which plan works best for you. That number again is 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Oh, what a night. Join me on Sunday, March 2nd for the 29th Annual Ellie Fund Red Carpet Gala at the Omni Boston Seaport Hotel. Hi, this is Candy O'Terry, honored to accept the Ellie Fund's Ellie Popkin Award with WCVB's Karen Holmes Ward from this beloved nonprofit devoted to breast cancer patients and their families. EllieFund.org, that's EllieFund.org, and don't forget to wear pink.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and if you act now, you can take advantage of a special promotion to St. Croix. Experience a vibe like no other and get a $250 per person airline credit when you book a minimum 5-night stay at participating hotels. Go to visitusvi.com and use code VIBE2025 to reserve your trip today. Take your next vacation to St. Croix in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com and use code VIBE2025 to book your trip. That's visitusvi.com and code VIBE2025.
As I mentioned before the break, we got some U.S. housing market data, and all indications from this most recent report that was released at 10 o'clock this morning is that the U.S. housing market continues to weaken. We saw sales of previously owned homes fall about 5% in the month of January from the prior month on a seasonally adjusted basis. Analysts out there from the National Association of Realtors were expecting a 2.6% decline. And like I said, we came in or around 5% or so. We still have a period where we are facing higher mortgage rates. I know relative to historical norms, they're not as high as what they once were, but sitting in or around 7% or so on the 30-year fixed mortgage. We really only touched 6% early in the fall. But if we're taking a look for the sales in January, they were 2% higher than they were in January of 2024, but we're still looking at close to a 15-year low here in terms of transaction volume. It will be interesting to see what type of activity we get out of the spring housing market. There were a lot of homes that were initially listed but peeled off the market and likely you'd think to be relisted come spring here as we start to head into the high season. The median price of a home sold in the month of January, also important to note, throughout the United States is up to a median price of $396,900. That's a 4.8% increase from the year before, the highest price we've ever seen for a month of January. Mark, thoughts on any of the housing data there? Do we lose Mark?
Looks like we,
He's
Mark, you there?
So irritated he didn't even want to drop in his 2 cents on where we sit from the housing market. We're in an interesting place at the moment where a lot of builders out there have a tremendous amount of uncertainty. Recently, we saw an index that tracks their overall confidence in the home building sector, and it had come down much lower from where it was previously. I believe it's rated on a 50 being a solid complacency for the confidence in the housing market. The number that we received earlier this week was somewhere between 42 or 43, which is a negative and more contractionary view of the housing market. There's many concerns that builders continue to juggle. One, you have the idea that there could be potential tariffs put in place on Canada and Mexico. 25% of materials used in the building process are imported from Canada and Mexico. So we'll get more information on what the tariffs will look like come March 1st if they actually do go into effect. But that plus you also have a lot of undocumented immigrant workers that could potentially not be part of the construction industry if they are, deported or scrutiny is placed on them. They make up about 13% of the construction workforce. So those two factors, concerns about tariffs and potential being hit on items like lumber and other items in the building process, plus undocumented immigrants being not, as a significant part of the construction labor force, could lead to some trepidation here on the home builder side of things. Mark, are you back with me?
Yeah, I am. Thanks. You know what really brings this all home for me? If you look at it's a simple stat, I think. If you look at home price growth since the end of 2019, so more or less the COVID era to the present, 2020 to now, using the Case-Shiller National Home Price Index, home prices have appreciated nationally now, some markets a little more, others a little less, by a little over 50% nationally, according again to the Case-Shiller Index. Is that sustainable? Well, it's beyond any rate of increase that we've ever seen. We don't have good data going back very long, but it beats any period for which this index has been in existence, with the exception maybe of the housing bubble, though it's awfully the housing bubble of the early 2000s, though it's awfully close. Is it sustainable? Wages over the same period up 25%. I'm using their average hourly earnings. Neither one of these series are adjusted for inflation, so you can compare them. So to sum up, first 2 points, home prices have appreciated more than twice as much as earnings have increased by the average hourly earnings measure. So you might ask, well, maybe it's population pressure. Is it an influx of citizens, legal or otherwise? Or is it something else demographic related? And I don't see that in the data, Paul. Population since January 2020. Now, these are people who've, signed the guest book, so there may be some people who aren't here legally missing, but population's up 3%. Overall, all these numbers are cumulative since 2020. Again, population up 3%, home prices up over 50%, average hourly earnings, our proxy for wages, up 25%. To me, the trend in home prices relative to these fundamental measures of economic expansion and wealth doesn't seem sustainable.
Right. But the supply side, though, that's the most confounding piece is how do you – I get it. Historically, these trend in increases is just absurd, but no one is able to logically explain how the supply side is going to be solved anytime soon. And the problem is it's such a fragmented, localized market that we could sit here and talk about what to do in New England. That greatly differs from what someone in Texas or the Sun Belt would be doing in terms of new home construction. Not to mention the other sort of phantom cost that buyers are dealing with is that you've got insurance costs that have surged 52% since 2020. That significantly has an impact on monthly housing expenses. Obviously, everything that went on in California in terms of the wildfires. We had a bad hurricane season, and these issues don't seem like they're going away. The home insurance market is going to be more and more challenging to navigate. So you have buyers that have home prices, like you mentioned, Mark, that have gone up 50%. You've got interest rates significantly higher than they were in 2020 and 2021, with a 30-year fixed mortgage sitting at 6.85% today. And you've got insurance costs that have surged 50% since 2020. A cocktail that leads to very little affordability, and unfortunately you don't have a tremendous amount of builder demand. There's certainly some uncertainty there that I was alluding to earlier, so it doesn't spell a very rosy picture for the U.S. housing market. Perhaps I'm proven wrong come this spring, and it's more robust than we anticipate, but we're going to have to wait and see till we get that data. We're going to take a quick break here on the Financial Exchange. When we come back, Wall Street Watch and much more right after this break.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes, and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, what happens if you don't have a healthcare proxy in place and your spouse needs nursing home care?
So this is a basic document that we don't talk about as much as we should. It allows you to appoint somebody else to make a medical decision decision for you. And by the way, it's not just one medical decision. It could be any number of things, from prescription drugs to doing a surgery. And yes, the most important one, which is, hey, if all hope is lost, I don't want to, be on a machine. But that's the basics, and you do need it for that. But the bigger point is, if you enter a nursing home and you don't have one of these, you're not going to be able to admit them. You're going to have to go get a guardianship in order to admit them to the nursing home, because they're not going to allow you to do that. So very important that you have one for that. Now, guardianships are time consuming and expensive. You got to hire a lawyer. You got to go through a lot of nonsense, right? If you have this basic document, which you should have for anyway, just for your basic purposes, having it not only for those reasons, but to help you get into a nursing home if you need to, is essential.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request the brand new guide from Cushing & Dolan. It's called Back to the Basics. 866-848-5699, or you can request it from their website, legalexchangeshow.com. Cushing & Dolan have been helping families like yours for more than 30 years. Call 866-848-5699 or request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Following yesterday's sell-off, markets today are extending their losses modestly as Wall Street witnessed a substantial rally in global markets, especially in China, driven by Alibaba's strong results from its AI strategy. Investors are also reacting to news surrounding United Health weighing on the Dow. Right now, the Dow is down by about 0.8% or 364 points. S&P 500 is down about 0.2% or 38 points, and the Nasdaq is down by 0.7% or 140 points. Russell 2000 is down nearly 0.6% or 13 points. 10-year Treasury yield pulling back by 3 basis points, now at 4.46%. And crude oil down nearly 2% lower on the day, trading just above $71 a barrel. United Health is taking a hit of over 8% so far today on the heels of a report from the Wall Street Journal that the Justice Department has launched an investigation into the healthcare giant's Medicare billing practices in recent months. The investigation is reportedly examining United Health's practices for recording diagnoses that trigger extra payments to its Medicare Advantage plans. Meanwhile, the Financial Times is reporting that a Japanese group, including a former prime minister, plans to approach Tesla about investing in Nissan. Nissan shares jumped over 9% on the news. Sticking with the auto space, where EV maker Rivian posted its first quarter of gross profit, though much of that was driven by sales of regulatory credits to other auto companies rather than EV sales. Rivian shares pulling back by 6%. Elsewhere, shares in energy drink maker Celsius surging by 23% after the company beat fourth quarter earnings and revenue expectations. Furthermore, Celsius agreed to buy competitor Alani Nu for $1.8 billion. Fintech company Block reported a top and bottom line miss in the previous quarter, sending shares in the parent company of Cash App and Square down by 15%, and Dropbox down by 13% after the software company said it expects a 1.5% decline in paying users this year. I'm Tucker Silva, and that's Wall Street Watch.
In the prior segment, we were diving into some of the home sales data that we got this morning here at 10 a.m. What we saw from the January report is existing homes decreased by 5% in September, reaching a seasonally adjusted rate of 4.08 million units. And we saw the national median existing home price up to $396,900, a 5% increase from the prior year. And Mark, you had one last thought on the supply side of things as we look at the housing market as a whole?
Yeah, the one point I wanted to make, Paul, and this is going to sound counterintuitive and probably a little nuts, so feel free to say this is nuts. But it's really hard to disentangle supply from demand. For example, if I gave everybody $1 million, and I didn't come up with this example, I'm just going to adapt it to this context. If I gave everybody $1 million, you might see demand for, I don't know, homes go up or cars or anything. If you were looking at the market from the other side, though, it might look like a supply problem. It might look like we're not making enough cars, not building enough homes. You can't necessarily just looking at transactions. This is a really subtle point, and it took me a long time to understand it. So don't be surprised if this doesn't sound consistent with your experience or common sense. But just looking at transactions and activity, it's impossible to tell, it's difficult to tell, whether you have a excess demand problem on your hands or too little supply. Now, we know inventory in historical terms is low, but those measures are always relative to demand. They always quote months of inventory, right? That's probably one of the more prominent statistics.
Right.
My point is you never really know. And this relates to the inflation we experienced in 2021. It really started in 2020, blossomed, for lack of a better word, in 2021 and 2022. Of course, the debate rages now in economics. Was it a supply problem? Were COVID-related constraints on shipping and other things strangling the economy? Or was it a demand problem? Did government put too much stimulus into the economy, putting pressure on already constrained supply? Economists are going to argue about that for years. My guess is in 5 or 10 years, if we have a big dip or two in the economy, which is almost inevitable, it'll take care of the so-called housing supply problem, and nobody will be wringing their hands over it.
I just don't know how.
End of thought. I don't. Really
I just don't know how you can't make the argument it's a supply issue. To me, that seems just crystal clear. Post 2008, the country's been underdeveloped in terms of the housing construction. So to me, you mentioned some of the trends in population growth, plus the fact that you've underdeveloped from a building perspective over the last 10 to 15 years. To me, it just screams supply. That's it.
Sure, there is that element, Paul, absolutely. But what if the economy is still running too hot? I know this is my favorite theme. I bang this drum every time I appear here on the Financial Exchange. But what if this is just another symptom, like frothy stock market valuations, like persistent core inflation, like consumption in other areas that continues to run above trend? What if this is just another example of excess demand in the economy that the Fed hasn't done enough to address? That thought sort of bounces around in my head.
We will see as we get more and more data and see how the housing market trends over the course of the next couple of months. Mark, help me understand something here on this next piece from the Wall Street Journal. Elon Musk is looking to audit the Federal Reserve. And I was asked about this on one of my radio calls this morning. It's hard for me to really put in a whole lot of context here, other than obviously we know that he's been looking to cut costs and try to increase transparency and eliminate bureaucracy across the government. But the idea of auditing the Federal Reserve, to me, it's already subject to annual financial audits by external auditors. They submit reports to Congress and testify regularly. What's the deal with this?
Okay, my tinfoil hat view on this is that this is the first step to a White House takeover of the Fed. I firmly believe that. That's just my imagination running wild. We all have our little conspiracy theories that we like, but I don't think it's too much of a stretch. The president has said he thinks he should set interest rates. So this to me is the first step in infringing on Fed independence. They'll find something that they can't immediately explain. They'll claim it's a massive scandal, and then the president will move in and put himself on the FOMC. That's my Friday morning indulging a conspiracy theory interpretation. A more grounded point, I think, to make about this is that the Fed is self-funding. You could eliminate it tomorrow. It would actually cost the government money. And by self-funding, I mean Fed owns treasuries. They own a lot of treasuries. Yep. They use the interest on those to pay everybody's salary and all the great researchers that they have and to keep the lights on, et cetera. They don't get anything from Congress. It doesn't cost the federal government a dime. You could eliminate the Fed, as I said, tomorrow, and it would actually cost the government money. So does Musk know this? I'm not sure. People have documented cases of him claiming that there are Social Security beneficiaries who are 150 years old still getting benefits. He didn't seem to know that the database that they use when the date of birth lacks a value, the database defaults to 1875, which would mean that a lot of people look like there are 150 who aren't. Musk didn't seem to know that. So I guess my point is he may not understand that the Fed is self-funding. My more sinister take on this, for what it's worth, is this is the first step in a Fed takeover by the administration.
I just don't know if on a Friday I'm willing to go that far, but I like how you presented both sides of the argument there with the tin hat and the more grounded approach in terms
Paul,
of...
you're way too... If you had agreed with that, I'd be really concerned. You're one of the more level-headed people I've ever met. Wise beyond your years of
I have been on a lot of Dayquil and NyQuil over the course of the last week, so anything is possible, and it is Friday. We're going to take a quick break here on the Financial Exchange, but when we come back, we're going to be talking about a couple more issues here, whether it's the U.S. Treasury long-term debt sales, talking about Treasury Secretary Bessent and his commentary, as well as the U.S. and its demands for Ukraine to sign a minerals deal. That's right after this break here on the Financial Exchange.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. If you're nearing retirement age and are concerned about how to protect your assets, you need to call Cushing & Dolan, the experts in elder law. Their new guide is called Back to the Basics, and it will help you create a plan that will help you understand issues like avoiding probate, passing your assets along to your family, and potentially eliminating your estate taxes. This free guide has all the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing & Dolan have been helping families like yours for 30 years. Let them help you, too. Get their new guide called Back to the Basics today. Call 866-848-5699 or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your health care plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare, Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
The U.S. doubles down on the demand that Ukraine sign its minerals deal. So what's been going on here is a bit of a rising war of words between President Trump and President Zelensky from the Ukraine regarding a mineral rights deal that would be worth hundreds of billions of dollars to the U.S. Basically, I believe it was Treasury Secretary Bessent that had met with Zelensky in person and had requested that he sign a deal that would give 50% of a list of Ukrainian natural resources, the U.S. Economic share and participation in those. And so we'll just look at this from an economic standpoint. The argument being made here is $100 billion of military support has gone to Ukraine over the course of the last 3 years, funding the war efforts. And the idea behind the deal is to extract some value financially out of the Ukraine, specifically targeting some of these valuable minerals that it has a large resource of throughout the European region, Mark.
Yeah, I'm a little surprised by all the pearl clutching. People think it's so unseemly that we asked Ukraine for some compensation. This is a totally normal thing to do. The only reason we went into World War I, or a big reason, as a kid you learn we did it to make the world safe for democracy. But in reality, American companies were telling Wilson, if the Allies lose, we lose a lot of money. World War II, we loaned the Brits a lot of money. I think it took them until the 90s or the 2000s to pay it off. So there's nothing unusual about asking for compensation. Now, you could argue that one should go about it a little differently. We allegedly put a piece of paper in Zelensky's face and said, sign this or
without
become a
talking
vassal
to your cabinet.
Yeah. It's Ukraine may have worth up to $12 trillion in critical minerals, lithium, graphite, cobalt, titanium. I'm obviously reading off the report here. So it seems to me to be a legitimate topic of discussion.
We'll see how that plays out.
But Paul, it's not a big part of our GDP. Even if they gave us a $600 billion check today,
yep,
that's about 1.5% of the United States annual output.
So
I don't know if we notice
context in there. Yeah, absolutely. Absolutely.
If you're nearing retirement age and are concerned about how to protect your assets, you need to call Cushing & Dolan, the experts in elder law. Their new guide is called Back to the Basics, and it will help you create a plan that can help you understand issues like avoiding probate, passing your assets along to your family, and potentially eliminating your estate taxes. This free guide has all the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing & Dolan have been helping families like yours for more than 30 years. Let them help you too. Get their new guide called Back to the Basics today by calling 866-848-5699. That's 848-5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Treasury Secretary Scott Bessent has stated that the U.S. is a long way from boosting longer-term debt sales. The Fed is going through a quantitative tightening program where they're letting these longer-term treasuries roll off their balance sheet. They were the biggest buyers of these securities during the COVID era, and we can argue that it went on for too long, the amount of purchases from a quantitative easing perspective. But the Treasury Secretary is noting that that's one of the factors as to why we will not be boosting longer-term debt sales here, Mark, in the near term.
Yeah, this is really the primary function of the Treasury Secretary, to ensure that the debt issued by the U.S. government is absorbed by the market without causing any impact. Ideally, you don't want to move interest rates every time you sell debt. There's always a little bit of movement, but you don't want anything inordinately disruptive. And I know that's vague, but that's sort of the name of the game. So the challenge is always, suppose they have to raise $100 billion in a month. Do we issue treasury bills, very short-term debt, the type of stuff that ends up in a money market fund, or do we issue longer-term bonds? The rates on the two right now are very similar, but there are implications. You need to roll that debt over, obviously, if you finance it using short-term instruments. So the question on Bessent's mind and others every day is, do we think short-term interest rates relative to long-term interest rates, are they going up or down? We talk about it daily on the financial exchange, but it's just sort of trivia for us. For the United States long-term financial position, it's kind of life and death.
Yeah, we sit right now at the 10-year U.S. Treasury at 4.45%. It got as high as about 4.8% and as low as 3.75 earlier this fall. So it's something that is worth following, the longer end and the shorter end of the curve on the interest rate side of things. And certainly Scott Bessent's role is important, but no major changes, it seems like, in terms of a shakeup there with issuing more longer term treasury debt. Mark, any thoughts here on this radical proposal that is getting some headline coverage on Bloomberg with 100-year non-tradable zero coupon bonds as a way to refinance our debt structure? Again, another story that makes my head spin a little bit.
No, you would do it's not unusual. I think Disney issued a private company, different context, but Disney issued a 100-year bond at one point, I think. Other corporations may have too. Other governments have done it. The Brits used to do it. They used to have perpetual. I think they called them consols or something. Anyway, it's not unusual, Paul, for a government to issue a very long duration bond. Again, it comes down to, do you think you can finance the government's debt more cheaply, by doing so? You always have your eye, the Treasury Secretary does, on the average rate of interest that the government is paying, and we're right now paying 3.3% on average to holders of U.S. bonds. Over time, that can't be higher than the economy's rate of growth. Otherwise, debt spirals out of control. Slightly different point, but something else the Treasury Secretary has to be mindful of.
Yeah, the share of interest payments as relative to our budget is increasing because of that dynamic that you just alluded to there, right?
Yeah, great point. Exactly.
And so that's something that we have to continue to monitor, and really hasn't been something that's been an area of focus at all over the last, 10, 15 years when we've been in this very suppressed low interest rate environment, both on the longer end and shorter end of the curve here. So that's just something that is being mentioned about at the moment. We'll see if it gets any traction in terms of meeting. It's something that they're going to be they've discussed preliminarily, but no real action on it here at the moment. But we'll keep you apprised of any changes as we hear more. Taking a look at some of the market indices and their performance today, the Dow Jones is off 397 points, or close to a full percent. The S&P 500 is sitting off 2/3%. The NASDAQ here is off over 0.75% or 155 points. If we look at the U.S. 10-year Treasury, that is off about 4 basis points as the investors continue to weigh the state of the U.S. economy. It's sitting at 4.45%, and U.S. West Texas Intermediate oil down 2% today at $71 a barrel. That's all the time that we have for the first hour here on the Financial Exchange. We're going to take a quick break, but when we come back, we've got much more to cover right after this.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, Desi is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, and in it, you'll learn how to protect your assets from probate and potentially eliminate your estate taxes. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Understanding Medicare, Essential Questions Answered. Mike, first one that most people have: how do you actually become eligible for Medicare?
Vast majority of us, you turn 65, and there's a special window that becomes open to you when you are turning 65 for you to sign up for Medicare. And important here because you really do have to sign up. Even if you might not be using the coverage in the way you planned, there's a 7-month window, 3 months before the month you were born, 3 months after, and the month of your birth, that you have to sign up for Medicare, and you need to get in there and do so. Otherwise, if you're disabled, you are potentially eligible for Medicare, but for most of us, it's that 65th birthday.
What are the different parts of Medicare, actually?
Yeah, so the Part A basic piece is just your hospital insurance coverage. Most people don't pay for this. This is part of the benefits, and it'll cover inpatient hospital stays, skilled nursing facility care, etc. Hospice care, for example, is in there. Then you get into Parts B, C, and D, and that's where you get into more complex stuff. But your Part B is your medical insurance. Part C is your Medicare Advantage plans, and then Part D is an important one when you're retired as well, your prescription drug coverage, and that's where getting a professional involved there to help you consult on what you might need given your specific health needs is important.
The guide is titled Understanding Medicare, Essential Questions Answered, and it discusses these topics as well as a host of other ones. How do you request it? Call 800-393-4001. That phone number again to request the guide is 800-393-4001 for the guide Understanding Medicare, Essential Questions Answered.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Paul Lane and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Paul Lane and Marc Fandetti.
Kicking off the second hour of the Financial Exchange, we've got markets in negative territory across the board, with the Dow Jones off about 400 points, the S&P 500 off 0.2%, and the NASDAQ off 0.7%. as well. We got some home sales data earlier this morning that was not particularly strong. We saw home sales drop sharply as prices hit an all-time high for the month of January, with the national median home price clocking in at $396,900. We also saw a decrease in sales volume of about 5% for the month of January on a seasonally adjusted basis. Part of the other reason why we're seeing the Dow Jones sell off a little bit, of course, it's only 30 companies and it's price weighted. And as a result of that, United Healthcare, the company that we're going to talk about in our next story, which is over $457 a share as its price, has a pretty significant weighting within the Dow Jones. United Health is off 9% today. The reason that they are off is that the Department of Justice has initiated a civil fraud investigation to United Health Group's Medicare billing practices. Specifically, they're looking at whether United Health recorded diagnoses that led to increased payments for its Medicare Advantage plans. This is saying that the report of United Health's documentation methods may have resulted in billions of dollars in additional federal payments. As a result, like I mentioned, the stock is selling off. They're also dealing with some other challenges. There's an antitrust investigation by the DOJ to block its acquisition of Medius. I don't know if I'm doing that one right, but $3.3 billion was what they were looking to purchase it for. So again, Mark, United Health finding itself in hot water here with this investigation. Hard to say what the findings are going to be, but certainly selling off on some of this news.
Yeah, the Centers for Medicare and Medicaid Services estimates that fraud, I think it was last year, totaled something like $20 billion, and I'm rounding up a bit. So not only is United Health selling off a bit today on the prospect that this investigation will escalate into charges, but the entire sector's being weighed down by it. I guess it suggests, as others have pointed out, that the government might be looking more carefully at practices of those who offer Medicare Advantage and other I'm going to garble some of the terminology here. I'll just call it all Part C. Part C benefits in the context of looking to recoup money generally. You don't want to be on the wrong side of the Elon Musk freight train. This isn't related to that, but this is another tool that the government has at its disposal, I guess, to crack down on. I'll call it wasteful spending. I don't know that I don't know if it's fraud. I guess the investigation will make that determination.
The scrutiny that's being placed on is specifically the company's house calls unit, amongst other areas. But this was an area of the business that would include in-home visits by nurses working for that unit. And what they found is that each visit by the United Health employed nurses was worth an average of $2,735 in additional federal payments, a journal analysis of Medicare data spanning from 2019 to 2021 found. So we'll keep you posted as those developments go, but as a result of it, you do see United Healthcare selling off a little bit today, off about 8% in the early trading here, almost 9%. Warren Buffett is holding a significant amount of cash on the balance sheet. For Q3, Berkshire Hathaway now is up to over $300 billion of cash and treasury bills. This is the highest on record of cash and treasury bills as a percentage of the company's assets going back to 1998, according to Dow Jones market data. So certainly Warren Buffett isn't a market timer per se, Mark, but obviously he's someone that scrutinizes valuations quite a bit, and you would think, trying to parse through the details of his behavior, that he finds that stocks are overvalued, which we've covered. They are, historically speaking, and as a result, he's keeping more cash in the war chest. But we will get the annual shareholder letter from Berkshire Hathaway tomorrow. So always interesting, his commentary. He is still a huge presence in the financial sector and on Wall Street that will be interesting to see what he has to say out of that shareholder letter tomorrow.
Yeah, if you look at Berkshire's cash as a percentage of total assets under management over time, they're not a great market timing. That statistic is not a great market timing indicator. Now, the data I have here is a little bit different than the statistic that you just read with respect to cash being at its highest level since 1998. I have a few years where it looks like it was higher, but I may be using a different measure here than the source that you cited. Either way, I think when a value manager like Buffett loads up on cash, it's not necessarily, though it might be, due to his overall bearish outlook. It's just because he can't deploy cash at valuations that he thinks are attractive. This is true of any active manager. So not a great market timing aid, Paul, and that's probably not surprising given Buffett's philosophy as I understand it.
Buffett is 95 years old, and the company finally eclipsed the $1 trillion market value market cap earlier this year. So it's been 60 years at the helm for Buffett. It'll be interesting to see what kind of commentary he has there. They do have Greg Abel, who will be the successive CEO once Buffett, likely passes away, or if he ever decides to step down. But just amazing the run that he's had at the company, going over 60 years, and a tremendous performance for Berkshire Hathaway in general. We're going to take a quick break here on the Financial Exchange. When we come back, we're going to be talking a little bit about credit card debt. We have reached a level of $1.2 trillion of credit debt as a nation. We'll be going over that, whether it's significant or not. And we'll also be talking about Nvidia stock and its wild ride. That's right after this break here on the Financial Exchange.
Breaking business news as it happens, only here on the Financial Exchange Radio Network.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Oh, what a night. Join me on Sunday, March 2nd for the 29th Annual Ellie Fund Red Carpet Gala at the Omni Boston Seaport Hotel. Hi, this is Candy O'Terry, honored to accept the Ellie Fund's Ellie Popkin Award with WCVB's Karen Holmes Ward from this beloved nonprofit devoted to breast cancer patients and their families. EllieFund.org, that's EllieFund.org, and don't forget to wear pink.
Estate and asset protection are the keys to a successful retirement. Cushing & Dolan's new guide is called Back to the Basics. It contains a simple blueprint that will help you create a retirement plan that protects your assets from probate and the nursing home, while also giving you guidance about how to create your will and set up your beneficiaries so that your family's financial security is intact as you get older. If you haven't done your planning yet, or need a second look at your existing plan, call Cushing & Dolan today at 866-848-5699 and ask for their new guide called Back to the Basics. There are many necessary elements that you'll need to include to give you the peace of mind you want as you prepare for your later years. That number again is 866-848-5699, or you can request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
The Financial Exchange is proud of our partnership with the Disabled American Veterans Department of Massachusetts. This year's 5K will be here before you know it, so mark your calendars for Saturday, November 8th. We'll be keeping you updated on registration information in the coming weeks, but in the meantime, if you want to help our great American heroes right now, just visit dav5k.boston where you can make a donation today and support programs such as the Veterans Transportation Program, which takes injured vets to their medical appointments. That's dav5k.boston. All right, let's do a little bit of trivia here on the Financial Exchange. And on this day, back in 2003, Bill Maher's political talk show, Real Time with Bill Maher, debuted on HBO. Bill Maher's first successful talk show ran on Comedy Central from 1993 to 97 before moving to ABC and running for 5 more years. So, trivia question today. What was the name of Bill Maher's talk show on Comedy Central and ABC? Once again, what was the name of Bill Maher's talk show on Comedy Central and ABC? Be the 6th person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the 6th correct response to text us at 617-362-1385 will get that t-shirt. See complete contest rules at financialexchangeshow.com.
One of the favorite tropes of some of the investment publications that we track closely, whether it be the Wall Street Journal or Bloomberg or Financial Times out there, is to list the amount of credit card debt that this country has and how it's reached record highs. And part of that, I get annoyed with that piece because, yeah, obviously we're going to have more credit card debt than we did in 2000. Over 25 years, there's this thing called inflation. So the numbers of debt out there are going to be higher because things cost more. We do sit at about close to 1.2 trillion in credit card debt. But if you look at percentages, and particularly the delinquency rate is an area that is helpful to focus on to get a sense for, is this debt problematic? We have seen some declines in the delinquency rate. We were sitting around 2.5% credit card delinquency rates. This is from the St. Louis Fed organization. Their Federal Reserve Bank put this data out. We've gone up to around 3 to 3.2% over the course of 23 and 24, but that has backed off a little bit through the end of 24 down to 3.08. So it's not something that I'm, significantly worried about. This is nowhere near the delinquency levels we saw in 08 or 09, where we were eclipsing anywhere from 6.5% to almost 7%. But it certainly is troublesome that you have the average consumer credit card balance at $6,600, just given where interest rates are on that credit card debt at the moment, Mark.
Yeah, well, as you said, if the economy continues to grow and spending continues to grow, credit card balances, they, as a researcher would point out, they share a time trend with this other stuff. That's a fancy way of saying, yeah, everything's growing. We're going to hit new records in stocks, in home prices, in credit card debt, you name it, every single year. All else equal. When the economy slows, obviously this series and others that are tied to economic growth might turn over. That will be a huge problem, obviously, for people who are over leveraged, who've taken on too much credit card balance, a slightly different subject. I'll just point out that the eye-popping growth we've seen in credit card balances over the past 5 years, and I'm using, as you might have been referring to, Paul, the Federal Reserve database for large bank consumer credit card balances, the growth rate over the past 5 years hasn't been much different than the previous 5. So basically, we're on the old trend line. I'm not saying this won't be a problem. If the economy slips into recession, job losses pick up, people aren't able to make their payments. But this won't be a problem probably until that point, which is not a very profound insight.
But it bears monitoring, and I can't reiterate enough for listeners out there. If you have credit card debt, just understand the interest rates you're paying. They're upwards of 22, 25%. And so if you can avoid it, best to do that, because you don't want those card issuers collecting that significant amount of interest. Nvidia stock has been on a wild ride. Wall Street has stayed relatively calm and continued its bullish position. Back a couple weeks ago, the Chinese AI startup DeepSeek released one of its new models that really spooked a lot of technology investors out there, and we saw Nvidia's stock drop 17% in one day. Very important to note that Nvidia's stock has been one of the best performing stocks in the S&P 500 over the course of the last couple of years. So it was significantly valued, whether you look at a price to earnings ratio or just its market cap in general. Still, I believe, is eclipsing somewhere around $3 trillion. But the concerns regarding the company was that because of this new AI startup DeepSeek, initially, there was some false information sort of mentioned out there that it was less costly to build this model. It's not entirely clear. It seems like the more analysis that's been done to build DeepSeek's model, there was still a tremendous amount of capital investment that went into building it, close to billions of dollars, or 500 million was the number mentioned, though the cost to run this type of model is much cheaper than its United States peers. OpenAI and ChatGPT is one of its biggest competitors, so it certainly did shake up the market. I've done a lot of reading on it, and ultimately it seems like investors, while initially spooked by the news, have sort of lessened their concerns a little bit. Really what is going to be important is we're going to get NVIDIA's earnings report next week. I believe it's either Wednesday or Thursday.
After the bell.
Wednesday after the bell. We'll see how they're continuing to sell their new chips. But it seems like the overall tech sector takeaway from this is that they're still going to be an integral player, NVIDIA, in the AI infrastructure. Perhaps their margins that are 85 or 90% on some of their chips, those will be eaten away. But this release of DeepSeek's new model really only makes AI likely more prevalent and widespread because it's open source. And that ultimately will be beneficial for those companies that are AI adjacent. Granted, NVIDIA might take a little bit of hit on its margins from a longer term perspective.
Yeah, it doesn't seem like anything can stop or diminish the optimism, exuberance, you might say, of analysts that cover this stock or overwhelmingly bullish. And of course, individual investors, they just shrug off all the possible threats to the business model. Something as existential as a shortcut in code that would reduce the chip requirement by, I don't know, an order of magnitude, more than that, reduce it by 90% or more. I don't know.
It's something that it's sitting at $3.4 trillion for a market cap, but when you have a lot of big players like Microsoft and others spending billions of dollars of capex to invest in building out this technology, you know, and this isn't a secret, that they're investing internally themselves to try and replicate some of the infrastructure or look for cost alternatives to NVIDIA's dominant place in the market. And what's always been a constant in tech is innovation and driving costs down. And DeepSeek's unveiling was a prime example of that these models could be run much more cheaply and could be more widely available for many consumers out there, or investors, business owners, and things like that. So continuing to be interesting to see what we get out of NVIDIA. They are trading at 55 times on a price to earnings basis, but we'll get more data on their revenue growth next week on Wednesday after the bell, but we'll cover it on Thursday's show. Japan is looking to court Tesla on a Nissan investment. This was a bit of a head scratcher. Obviously, Nissan was in the news because it was looking to merge with its rival Honda. Those merger talks had collapsed over the course of the last couple weeks. Now, a new proposal being led by a former Tesla board member is that Tesla would now invest into the struggling car maker Nissan, and I just don't understand what would be the upside if you're Tesla, Mark, to invest into Nissan, which has been fledgling really a lot recently in terms of its sales growth.
Well, Elon Musk, who is sometimes a little cagey, he's calling this fake news.
Okay,
so
that's an important update.
I'm getting this secondhand from someone on social media is reporting that that's what he said. So I should qualify this with I'm not actually looking at something he wrote, which is also strange. He has opinions about a lot of things, as we all know. The fact that he maybe hasn't said something more concrete, I'll dig more deeply and see if this fake news comment attributed to him is itself fake news or not. But I found it curious that when we first read this story this morning, Musk apparently hadn't commented on it yet. He's not shy about commenting. So what's actually going on here, if anything?
Nissan is in the middle of an emergency turnaround. In November, they cut 9,000 jobs, and also what Moody's downgraded Nissan's credit rating to junk status on Friday. There's a lot of risks associated with their restructuring plan, and not having a partner at the table, whether it be an investment from another company or the merger talks with Honda, is put it in a very precarious position. Reading through the tea leaves, it does seem like the Japanese government would really like to see some sort of partner found for Nissan. They take a tremendous amount of pride in Nissan's position in the auto market, though Honda has done a lot better job managing its balance sheet, but it is important, it seems like, to the Japanese government. So it'll be interesting to see if they can get an investment from an outside firm or some sort of merger talks will emerge. But from all indications early on, it looks like Tesla's got enough on their plate, not looking necessarily, but we'll continue to research that if Elon Musk is willing to play ball with Nissan. Taking a look at markets, we've got the Dow Jones off over 350 points and the S&P 500 off about 0.5%. We're going to take a quick break here, but when we come back, we've got the answer to our trivia question and much, much more right after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your health care plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare, Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The calendar is turned, and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, Massachusetts recently raised their estate tax exemption to $2 million. Do people still have to plan?
Yes, it's a simple answer is yes, but let's think about it from a back to the basics standpoint, right? Some people think they don't even need a will, or if they have a will, that's all they need. First, I want you to know that a will is a won't. It won't avoid probate. It won't help you reduce estate taxes, which we're talking about. It won't help you protect assets from the nursing home, so it won't do a lot. So a will is really a won't, so please don't stop with a will. The reason you need to do a trust is this new exemption that you speak of went from $1 million to $2 million. So now with a trust, you are able to double that exemption by being a married couple and having a trust in place. You can shelter $2 million on the first death and $2 million on the second death to shelter $4 million. But you need a trust to do it. And while the exemption went up, which is good news, the cost of not planning just doubled. So very important to get your trusts in place.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Back to the Basics. Call 866-848-5699 or visit LegalExchangeShow.com to request it. Cushing & Dolan have been helping families like yours for more than 30 years. Once again, the phone number 866-848-5699 or request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Trivia question today was, what was the name of Bill Maher's talk show on Comedy Central and ABC? That would be politically incorrect. Mark from Harwich, Mass is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Matt. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
We've talked a lot about on the show the potential impacts that tariffs may have on some of the largest companies throughout the United States, because that's what we do on a daily basis, is track the publicly traded markets. So companies like GM and Ford and Stellantis, we've spoke about the potential impact there. I've also covered earlier this week on the show Walmart and what impact tariffs may have on their business. The difference between those businesses, due to their size and scale, they're able to better pivot strategically to lessen the blow from some of the tariff impacts. Again, a lot of these tariffs are just being rumored. We don't have any further information on tariffs on Canada and Mexico. March 1st is the deadline for those, though we have seen an additional 10% tariff on Chinese goods, and that is leaving some small businesses in a difficult spot, Mark, because they don't have that same agility and flexibility. Maybe they might have agility and flexibility, but not the resources that these larger companies have to diversify their supply chain from other sources.
Yeah, if you think about the way small firms set prices, it's probably just periodic. Amazon can reset their prices every millisecond. Small firms set them occasionally, I think. Well, I don't just think. Research bears this out, but it's old research, so maybe it needs to be updated. But if you think about small businesses and their relationships with each other and with bigger suppliers, they might have contracts, they might have handshakes, but the point I'm trying to make is they're stickier. Their prices are. Their arrangements are longer term, maybe because they're personal, maybe because the nature of the contracts that they engage in. And this, not knowing what your inputs are going to cost a year from now can wreak havoc on profits and on prices too. It's what actually makes inflation difficult to conquer. I know I'm tying in an entirely different issue here, but it's actually related. The rigidities, as a researcher would call them, in prices are what makes inflation hard to bring down without costs, and also what makes it difficult for, say, the Federal Reserve to manage monetary policy. So there are all kinds of implications here, Paul.
Business investment is another one. You have companies out there like General Motors saying that they're not going to spend a large amount of capital without clarity. So there is a bit of a holding pattern from large businesses and small ones out there in terms of business investment that they want to look before they leap into any of these, future product endeavors. So hopefully this uncertainty regarding tariffs is at least something that is only an issue for the first quarter, and we get a little bit more clarity as to what the tariff environment will look like so that businesses can adapt and consumers likewise when we get more information.
It's just baffling to me, Paul, because the adverse effects are concrete and they're in the present. The benefits of tariffs, and anyone who's ever looked at tariffs has concluded that they hurt a large number of people, but just a little bit, and they benefit a small number of people a lot. On average, we're worse off, but the costs are widespread, so nobody squeals too loudly, I guess you could say. But we know tariffs generally don't contribute to economic growth. Right. And in the short term, this uncertainty is a drag on economic growth. It's pushing up inflation expectations. It's delaying investment decisions, as you said. I guess policymakers, if there's any consistent thought process behind all this at all, must think the benefits are going to be huge. Boy, they better be to justify the economic damage that these could do if actually implemented, and that they are doing in the here and now.
No question.
The calendar is turned and the cold is here to stay, so now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visit usvi.com and use the code VIBE2025 for more information and book your trip today. That's visit usvi.com and code VIBE2025.
Piece here from Bloomberg. Walmart is worried. That's a bad sign for everyone. I have to push back a little bit on this piece. We covered Walmart extensively this week because they are a massive retailer and they came out with their Q4 earnings numbers. And the piece here goes on to say that there is some unpredictability and uncertainty that they mentioned in their conference call that they are concerned about. But I don't really see a tremendous amount of uncertainty that came out from their earnings call. They've continued to see tremendous amount of growth in their e-commerce space. They're investing in higher margin businesses, selling advertising to suppliers, and making more of a presence in Amazon's sort of playground with the third-party market sellers on their site and like the e-commerce stuff that I mentioned. So I just don't know if I necessarily see a great level of concern from Walmart. I mentioned them earlier. They're the type of company that wouldn't be as significantly impacted from potential tariffs with Canada and Mexico. The CFO was reported in the quarterly earnings call saying that two-thirds of goods that Walmart sells and makes and puts together are done domestically in the U.S. And so they've been operating with these tariffs for 7 or 8 years, just being in sort of existence, and they're not overly concerned with the impact. So I'm not sure if I see the same level of concern that this Bloomberg opinions column does, Mark.
Yeah, hard to know if we could generalize from it. Is this something specific? And I'm just repeating, I think, what you said, but saying it a little bit differently. I was scrambling to look up Walmart's share of retail sales. I should know that off the top of my head, but I don't. So if it's big enough, you could probably generalize from it. If it's not, it might be more specific to, it's hard to say their sector because they are retail in a macro sense, or something else business specific. It's hard to say. I think you said earlier in the week, or one of us did, that we'll believe there's a problem with the consumer when we see aggregate spending numbers like PCE, personal consumption expenditures, which we get a read on next week. When that starts to roll over, then I'll start to be concerned about potential softness in the economy or worse.
We're going to take a quick break here on the Financial Exchange. When we come back, we're going to be talking with Paul LaMonica from Barron's. We're going to be going over Hasbro and Mattel with Paul and much more right after this break.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your healthcare plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare: Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. If you're nearing retirement age and are concerned about how to protect your assets, you need to call Cushing & Dolan, the experts in elder law. Their new guide is called Back to the Basics, and it will help you create a plan that will help you understand issues like avoiding probate, passing your assets along to your family, and potentially eliminating your estate taxes. This free guide has all the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing & Dolan have been helping families like yours for 30 years. Let them help you, too. Get their new guide called Back to the Basics today. Call 866-848-5699 or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
As promised, we are joined by Paul LaMonica from Barron's, here to talk with us a little bit about Mattel and Hasbro stock, two of the biggest toy makers out there. Paul, thanks so much for joining us.
Thanks a lot.
So, Paul, a lot has been talked about in terms of tariffs and their impact on U.S. companies. Before the break, I was talking about Walmart and sort of its ability to pivot and use different suppliers if the tariffs were to come down the road from Mexico and Canada. But you cover here in your piece that in the case of the Chinese tariffs, that actually Mattel and Hasbro are pretty well positioned, even though most of us may think the Made in China marker is on every toy out there.
Yeah, it may seem that way, but both companies have been, transitioning their supply chains globally to other parts of the world. So, there are estimates saying that, for like the whole industry, maybe about 80% of toys made in China, but Mattel and Hasbro, it's a little less than 40% or so, and some of the companies are hoping to try and get that number down. Hasbro says hoping to get it down to 20% over the next few years. So I think that is one reason why these stocks have actually held up better than you might have expected in light of all the concerns about a global trade war, and the earnings have been solid as well. Mattel reported, decent results earlier this month, and Hasbro, announced better than expected earnings this week, and that drove the stock substantially higher.
You mentioned that in December, the CFO of Hasbro was working with suppliers to invest in new manufacturing sites. Just out of curiosity, what are some of the areas that they're looking at for new manufacturing sites? Is it Vietnam, Cambodia? Are they still staying within Asia, or is it domestic? What are some of the options they may be considering there?
Yeah, I think that Hasbro and obviously Mattel as well will be considering sites both in Asia as well as the nearshoring trend. I mean, that is definitely something that companies, and not just in the toy industry, have kind of found religion in to try and have some of its their factories closer to the U.S., be that Mexico, despite the tariff threats there, or other parts of Latin and South America. So it'll be interesting to see how that pans out. But I think another issue that kind of analysts have talked about is that keep in mind that Hasbro in particular, and I think maybe Mattel to a little bit of a lesser extent, they're also doing more in digital games. Hasbro is a very big revenue generator from its Dungeons and Dragons and Magic the Gathering franchises. So developing these online role-playing games where you're not necessarily maybe selling a physical product made in China or elsewhere, you have fewer tariff concerns there as well.
Certainly. Is there any catalyst that they've mentioned for this year in terms of Mattel or Hasbro that would potentially lead to increased toy sales? I know obviously Barbie, the movie, was fantastically popular over the course of the last couple years for Mattel. Anything that they have sort of in the quiver that may be some accelerant for sales growth for either of the two companies?
Yeah, no, that's a great question. I mean, I think with regards to Barbie, that's obviously still an area that Mattel can benefit from. But Hasbro, interestingly enough, yesterday just announced a deal with Mattel to sell Barbie branded Play-Doh sets. So Hasbro makes Play-Doh. So that's an interesting area where, the two companies, who knows if going forward there are, more opportunities for Hasbro and Mattel to do joint ventures. So, there had been, I think a lot of rumors on and off over the past few years about merger between the two that has never panned out. But, both companies could benefit there from partnering. But also, I think you can't underestimate the fact that there's going to be a lot more movie and TV content compared to last year because of the resolution of the writers and actors strikes in 2023. So a lot of movies that were, expected to maybe be on the calendar last year got pushed to this year, and both Marvel and Hasbro have various Disney franchises that could benefit them. So, Marvel with the Disney Princess, that could be something with a Snow White movie coming out. And then, we've got a couple of more Marvel movies, that could benefit Hasbro because they have, the licensing, there as well.
As a father of 3 young children, there is a lot of Play-Doh that is around our house. I absolutely hate it, but I'm sure there will be demand in my household to purchase that Barbie, sponsored Play-Doh or that partnership that you mentioned there. So I'll keep an eye out for it. That's Paul and Monica from Barron's. Thanks so much for the time, Paul. Really appreciate it.
Thank you. Have a good one, guys.
Mark, time for a little bit of stack roulette. I know you're chomping at the bit with, I'm sure, some meaty economic story rather than the usual lighthearted fare that we like to banter about on a Friday afternoon, I should remind you.
Heaven forbid I approach the weekend with some sense of levity.
We should just get the music back on, Tucker. Everybody's working for the
Loverboy,
I might burst into flames if you played that while I was speaking. We talk a lot about inflation and what drives it, and one important component is expectations. The other component is how hot the economy's running. But expectations are a key driver. If your expectations for inflation are higher, you're going to ask for more money from your employer. If you're a company, you're going to push up prices more today. Back to that conversation we were having earlier, Paul, about how businesses might have to respond to tariffs by raising prices now before those tariffs are even implemented. Well, here's the news. We learned today from Bloomberg, others are reporting this too, that long-term inflation expectations for prices 5 years from now, or how much people think prices will change on average per year between now and 2030, it climbed to their highest level in decades. Consumers now expect inflation to average 3.5% over the next several years. Now, this is about where core inflation is today, so it probably shouldn't surprise. Maybe people are just looking backward. It could also be that people are expecting higher prices because of tariffs. Your guess is as good as mine. But one thing, the reason I bring this up, in addition to it being inherently interesting to me anyway, is that it's largely driven by political preference. Democrat sentiment, Democrat inflation expectations have gone way down and way up respectively. Their outlook for the economy is soured. Maybe you should expect that. Republicans' inflation expectations have in turn gone way down, and economic expectations have gone way up. So you might just say, well, these numbers are just political. But I'll tell you what, people that voted Democrat in the last election, they make up over 60% of the country's GDP. Trump voters make up under 40. He got 36% of GDP in 2016. He got 29% in 2020, did a little better this time at 38%. So how blue states, to generalize, feel about the economy is important. They are most of the GDP, and it's not even close.
That's interesting. I'm amazed at how they're able to put that data together. But I guess from a state perspective, it certainly makes sense.
Yeah, that's how they do it.
Yeah, basically just going by state. It will be interesting to see how that fares out. You're right. Expectations play a huge role in what inflation looks like going forward. It can almost become a self-fulfilling prophecy. ESPN and MLB are agreeing to end their TV deal. ESPN had been a partner with the MLB since 1990, doing the national broadcast for Sunday Night Baseball, the Home Run Derby, and All-Star Game, but that is going to stop heading into, I believe, the 2026 season. It will be out for bid, and it just speaks to, I would think the position the MLB is in right now is relatively weak to some of its other competitors or other leagues out there, the NBA and NFL, where you've got ESPN saying financially they wanted to pay less for this deal. I have to imagine that the viewership has declined over this period of time.
I mean, ESPN's been in the home to Sunday Night Baseball, and that is just something that's a relationship, like you said, has been around since 1990. Like I was floored when I saw this today.
It had such an allure to it. I mean, maybe that speaks to my own preference, but I absolutely loved Sunday Night Baseball. But it just doesn't seem to carry the same weight that it once did. So it'll be interesting to see who scoops up those rights or what the MLB does with it. That's all the time that we have for this edition of the Financial Exchange. Dow Jones off 385 points, S&P 500 off a little over 0.5%. Have a fantastic weekend. We'll be with you right again here on Monday at 10 o'clock. Thanks so much.